In today's video, I'll be sharing an improved version of the ICT Silver Bullet, which I call the Diamond Bullet, designed specifically for trading gold with an exceptionally high win rate. The best part? You'll only need to trade for 1 hour each day at a specific time, without requiring any daily bias. We'll go through the rules for trading the Diamond Bullet for gold, live market examples, golden nuggets, tips to improve your chances of winning, and much more. Be sure to watch this video all the way through so you don't miss any crucial details, or the strategy might not work as intended. Grab your notebooks, and let's get started. First, you need to open the charts at 9:30 a.m. On the 5-minute time frame, mark all the recent swing highs and swing lows. If you're unfamiliar with swing points, they refer to a point where the price turns, with no higher or lower points on both sides of it. For example, a swing high is when the candle in the middle is higher than the candles on both the left and right sides. Similarly, for swing lows, the middle candle sticks out lower than the ones beside it. Next, wait for either a swing high or swing low to be swept. Make sure the price rejects the level without closing with a candle body. This is crucial. If you enter blindly without this confirmation, you may get stopped out by being on the wrong side of the market. Our trading window is from 10 a.m. to 11 a.m., which is when we look for trade entries. While these patterns may form before the window, your entry must be within this trading time. If no trade forms by the end of the trading window, close your charts and stop trading. Don't force trades. All times mentioned in this video are in New York local time, so make sure your fast bull chart is calibrated to New York time or UTC-4, Eastern Standard Time, to ensure you are trading at the correct time when the market has volatility. After the sweep, drop down to the 1-minute time frame and wait for a market structure shift with displacement, which leaves behind a fair value gap. Before moving to the next step, let's quickly recap some basic SMC terms to help you understand the strategy better. Market structure shift is when the price closes beyond the recent swing point, indicating a shift in order flow, either from bearish to bullish or bullish to bearish. Displacement is a strong, energetic price movement that suggests a large entity or institution is driving the price. Fair value gap is the gap left between the first and third candles during displacement. FVGs often act as magnets for price, pulling it back to fill the gap. Now that we've covered the basic terms, we combine them as powerful confluences for this strategy. You'll enter the trade using the FVG, an order block, or the overlap of both, whichever is your preferred entry pattern. Place your stop loss beyond the recent swing point. For take profit, aim for a 1:2 risk to reward ratio, which is sufficient to be profitable. You can also target the closest opposing liquidity, also known as the closest hanging fruit. Here's an important step to boost your win rate and profits. Once your trade reaches a 0.75 risk to reward ratio, take 75% of your position off the table and let the remaining 25% run toward the final profit target. You may also move your stop loss to the most recent protected swing point, or leave it as is. This way, you can secure profits even if the trade reverses. Now, to understand this strategy better, we'll go through some live market examples. But before that, let's discuss the pairs where this strategy works best. The Diamond Bullet strategy can be applied to all pairs and asset classes, including Forex, crypto, and indices. Personally, it works best on pairs like Euro-USD, Nasdaq 100, AUD-USD, GBP-USD, and more. However, since this video is focused on gold, we'll be concentrating on gold and other metals like silver and platinum. It's time to look at some live market examples, so make sure to pay close attention. We're on the 5-minute time frame for gold. First, we'll start by marking the recent swing highs and swing lows. I'll also mark the start and end of our trading window for demonstration purposes so we know when to start and when to stop. Now, I'll play the price forward and wait for either of the swing points to be taken out. As we can see, the swing has been taken out. I'll remove this vertical line now that we're in our trading window to keep the chart clean. Next, I'll drop down to the 1-minute time frame and look for either a market structure shift or a change in the state of delivery so we can move to the next step. Here's the last swing high before creating a new swing low. We've now created another low, so this becomes our recent swing high where I want to see a market structure shift. We're waiting for a candle closure above this swing to confirm our market structure shift. Once we close above the recent swing high, confirming the shift, we can either take an entry from the fair value gap below, or, if you don't want to miss the entry, you can enter right away with a market order. Since we've already had deeper consolidation in the third candle, it's less likely that the price will tap back into the fair value gap. Stop loss will be placed below the recent swing low. Make sure to give it a little breathing room for spreads. For the profit target, we're aiming for a 1-2 risk to reward ratio. Let me go ahead and execute this trade, risking 2%. Now, moving ahead to the next step, as soon as the trade reaches a 0.75 R, I'm going to take out 75% of the position to secure some profits. After that, I'll move my stop loss below this fair value gap, as the price has no reason to trade all the way back unless it's reversing. I'll let the remaining position run towards the take profit. And just like that, we hit our take profit, targeting this buy-side liquidity, giving us a solid trade. Moving on to the next example, I'll follow the same steps by marking out all the recent swing highs and swing lows. If new swing highs or lows form, I'll mark them as well. I'll also add a vertical line to indicate the start and end of the trading window again for demonstration purposes. Remember, we only take trades within the trading window to avoid overtrading. Here, we took out a swing low with no sign of stopping. Let me clean that up. The price keeps pushing lower, and it looks like we're targeting this swing low. Since we're getting close to our trading window, I'll remove the vertical line to keep the chart clean. I'll drop down to the 1-minute time frame and look for a market structure shift or a change in state of delivery, XAUUSD, for confirmation. This is the last swing high that created a new lower low, so I want to see a candle closure above this swing to confirm my market structure shift. The price has targeted the external swing low and created another swing low, so this becomes the last swing high where I'll be looking for confirmation and a market structure shift. We'll keep following this until we get our market structure shift or reach the end of the trading window. Make sure you wait for a candle closure and not just a wick through. You have to patiently wait for all the confluences to align. We've now got a candle closure above the swing high. Since there's no fair value gap in this leg to trade from, I'll execute a market order. I'll place my stop loss below this candle to save some pips, though there's no issue with putting it below the swing low. Take profit will be at a 1-2 risk to reward ratio, and I'll again be risking 2%. This is what I prefer for this strategy and my trading style, but you can risk whatever you're comfortable with. Now I'll be looking to take partials. I'm securing profits by taking 75% off at 0.75 R, letting the remaining position run, and moving my stop loss to the recent protected swing low. Just like that, this trade was another winner. You could also have trailed your stop loss to secure more profit, but if you're a beginner, I'd suggest sticking to a fixed risk to reward ratio. Before moving on to our next example, if you're looking for a shortcut to profitability, apply for the Trading Titan Blueprint by clicking the first link in the description. We offer tons of resources, tools, and exclusive strategies to help you get funded within weeks. I'll personally guide you to ensure you achieve your trading goals. Moving on to the next example, I'll start by marking out the recent swing highs and swing lows on the 5-minute time frame. I'll also mark the 10 a.m. and 11 a.m. time window. As we play the price forward, new swing highs and lows form, so I'll mark those as well. Since we're approaching our trading window, I'll drop down to the 1-minute time frame and look for XAUUSD or a market structure shift when the price closes below the last swing low that created a new swing high. At the start of the 10 a.m. candle, we see a strong bearish move with displacement, indicating a switch in order flow. You can wait for a fair value gap and enter there if you prefer, but I'll be executing a market order here. Stop loss will go above this candle to save some pips, but feel free to place it above the recent swing high for extra safety. For profit, we'll target the classic 1-2 risk to reward ratio, risking 2% again. We'll play the price ahead and repeat the same steps, taking 75% off the position at 0.75 R, leading the runner towards the take profit, and trailing the stop loss to the new protected swing low. Even if the stop loss hits and price reverses, we've already secured profits. This is how simple, yet powerful this strategy is. To help you make this strategy even better, here are a few exclusive bonus tips for sticking around this far. You can use an indicator called Liquidity Swings by LuxAlgo to automatically mark the liquidity levels for you. If you're new to this strategy, I suggest avoiding trading on days with high-impact news at 10 a.m. Once you gain more experience, you can begin considering news in your analysis. To check, click the calendar icon and then select Economic Calendar to expand the view. Make sure your time zone is set to UTC-4. Now, adjust the filters. Uncheck the first 3 options in the Important section to filter out low-impact news. In the Instruments Equals tab, uncheck everything except USD and metals, then click Confirm. This will show you any high-impact news for today and upcoming dates, so you can plan which days to trade or avoid. This setup has the potential to occur daily, but it doesn't happen every day, so don't force trades. Wait for all conditions and confluences to align perfectly before taking a trade. Let me recap all the steps once again. Come to your charts at 9:30 a.m. and on the 5-minute time frame, mark all the recent swing highs and swing lows. Once one of these swing highs or lows gets swept, drop down to the 1-minute time frame and wait for a market structure shift, displacement, and a fair value gap. The stop loss should be placed beyond the recent swing point, with a target of a simple 1:2 risk to reward ratio. If this video gets 222 likes, I will create a video on daily bias to help you improve your accuracy and win rate when pairing it with other strategies. A PDF file for this strategy will be available in our free Telegram channel. If you're serious about your trading journey, don't forget to apply for the Trading Titan Blueprint as well to get funded within 6 weeks. Until then, check out the backtesting video for this strategy by clicking the video on the screen. See you very soon. Peace.